The world's biggest mining company, BHP, delivered a mixed half-year financial set of results. Here's what you need to know now. The second biggest listed company in Australia reported its attributable profit fell 20% in the 6 months ending 31 December to $3.88 billion. That was well below expectations, and this was due to a $2.2 billion impairment cost from their thermal coal energy business because China banned coal imports, which BHP expects will remain in place for some time. However, if you strip that aside and looked at underlying attributable profit, that actually rose 16% from the prior period to $6 billion US. Also missing market expectations, though, of $6.3 billion. However, we did see an improvement in the underlying headline result, supported by record iron ore and copper production and pricing, which is critical because this is where the bulk of BHP's revenue comes from. And after the result came out, it was pretty clear that the market was focusing on free cash flows, hitting $5.2 billion US dollars thanks to higher commodity prices, which is why BHP declared a record dividend of $1.01 US per share. That's equivalent to paying out 85% of underlying earnings, also a record and 55% higher than the same time last year. Also keep in mind that the dividend is about a 7% dividend yield, above the market average of about 2.7%. So if you do buy BHP shares before the 4th of March, you'll be eligible to the divvy, which is paid on the 23rd of March. As for BHP's outlook, BHP noted in its report that with vaccine rollouts, this really removes the downside material risk to demand and pricing. And BHP also expects commodity prices to rise, supported by Chinese and global demand. BHP shares rose about 1% after their result to $46.33, and BHP's in a technical breakout. BHP is a UBS, Morgan Stanley and Macquarie buy stock, and it's a hold for Citi.